Hello and welcome to IVoT Eye on Investing, a discussion of the markets and investing from a long-term fundamental perspective, hosted weekly by IVoT Academy. To learn more about IVoT Academy, hit the link in the description. I am your host, Ed Butowski, managing partner of Chapwood Investments. Our two IVoT Academy experts are Chief Investment Officer of Turner Investments and IVoT market analyst Andrew Tang, and founder and CEO of IVoT Financial Training and IVoT Investment analyst Emil Westergaard. Welcome, Andrew. Welcome, Emil.
Thanks for having me.
Hey, thanks for having us, Ed.
Well, I love doing this show because it brings real insight into everything that matters on a weekly basis, and it's very, very informative. Today, Andrew will look at the battle between Trump and the Fed over monetary policy and how China might respond to offset U.S. tariffs. And Emil is going to perform a fundamental analysis of our stock of the week, SBUX, using the world-famous IVoT forecaster. Between segments, Emil will give you a brief preview of the IVoT Academy financial training platform, including tools and training focused on fundamental analysis as applied to personal finance, investing, and business management. The material contained herein is intended as a general market commentary solely for informational purposes and not intended to make an offer or solicitation for the sale or purchase of any security. Such views are subject to change at any time without notice due to changes in market and economic conditions and may not necessarily come to pass. The information is not intended as a specific offer of services by Chapwood Investments or Turner Financial Group. Andrew, why don't you take it away and kind of talk to us a little bit about how Powell and Trump are going at it and what you think the implications of that are?
Yeah, it's a sticky situation where Trump wants to strong arm Jerome Powell to basically lower rates now. Now, the president have said it, 6 months ago. He always wanted interest rates to come down because he wants the consumer cost of capital to come down. But the Fed has to basically stay as independence. And during his speech on April 16 at the Economic Club in Chicago, Powell already stated that he's not going to leave. He's going to stay independent, and he's going to basically keep his stance. And also the Fed indicated that we'll need more clarity from this tariff situation before the Fed can actually make a decision on reducing interest rates. So
what type of job do you think Powell has done up till now?
Well, I have to say the design of that infrastructure, the Federal Reserve, is designed to have a late reaction because everybody and almost every time you can hear people say that, oh, the Fed is so late in raising rates or the Fed is so late in reducing rates. But this is how it's supposed to function. So in my opinion, Jerome Powell has done a good job. Yeah, he has done a good job. It's like a big ship. You just cannot expect it to zig and zag so fast. And that is by design. It's not supposed to make pre-action. It has to always react and react in the right way. But in my opinion, yeah, he has done a good job. But I still believe that yes, the interest rate can go down a little bit because we have started lowering rates. Remember last year in September, and this is a long pause. And so the base case scenario right now is June. Okay. So if he doesn't lower rates in June, then yeah, all hell's going to break loose.
How about the dollar, Andrew? I mean, the dollar's down over 10% since the beginning of the year.
Yeah.
And obviously, if we lower interest rates further, it's putting the dollar further at risk, no, in terms of the global.
Yeah, I think the dollar sold off is in the anticipation of rates coming down lower, and also it's a function of the bond vigilantes basically selling treasuries and a little bit of lack of confidence in U.S. policy. So all of the above, mix into the mixer, and that's what you get. And this is what the White House wanted. And now the central banks around the world, they have to see if they're going to lower rates. And Actually, that leads into a perfect segment because for China, in the last Trump administration, China has devalued its currency quite significantly to offset the cost of tariffs that that the country had to bear, and it was one of the success story to be studied. But now we're wondering that if China is going to, devalue its currency again. But this time it's a little bit different because China is in a much weaker stance now. Their real estate market is still in a rut. Lots of performing loans. The transparency is a great issue. We don't even know we can't even certify the integrity of the GDP data, the unemployment data, and then moreover the debt, that is being reported. Various websites shows that the debt to GDP ratio is still around 60 to 80%. Meanwhile, we strongly believe that it's closer to 250%, similar to Japan's. And so when we have data that we're trying to work with, plug into our models that we can't trust, that's a big issue.
Yeah.
Yeah.
But let me
But
just, I know I'm sorry, Ed, your favorite topic, I'm actually speaking for Ed here, is inflation. So, if the dollar weakens, then that should be a precursor to more inflation. Um, so I
Yeah.
guess, I mean, for our average viewer, that's a big issue, right?
Well, that's really on a global trade level. In the supermarkets, we're not really going to feel it yet. So there is some delayed effect to for this to show up in the consumers market. On the flip side of that, it'll definitely help our export because our goods and services will be cheaper to others nations. Within our domestic economy, there is a delay kicker again.
Yeah.
We're not really going to feel it, but overall tariffs, they will bring prices up in the short term. But the long-term expectations of inflation is quite low. If you look at the 10-year expectations, it's still in the two threes, somewhere around there. And if you take a look at Trueflation, which is a newer method of collecting inflation data, we're at 1.3. So, the largest component is energy, quite stabilized. There's plenty of supply. And, with the scare of a global recession looming, energy, it's not really going anywhere neither, in terms of oil prices. And then the other flip side of it of collecting data is shelter. You know, the rent roll or the shelter data, which is another large contributor to inflation, is very much delayed. So again, we take a look at data points from different providers, and we see that inflation in the long term, it's not an issue.
so one of the things that I laugh about is, and I'm a conservative, I'm a Republican, but when Trump comes out and tries to make economic decisions, he's not an economist. He's a real estate
No.
guy. And I think that it's laughable that he's trying to make broad-based economic decisions for the entire country and in de facto and for the world because he wants lower interest rates. Every president wants lower interest rates, but you have to look at the macroeconomics to support that. And I just find it really laughable that Trump believes that he knows more than Powell does.
Yeah, I agree with you on that. But I think I have a bigger problem with Trump is his way of delivering the message. For him to call Jay Powell a loser and name calling other politicians, I think that's really childish. It really doesn't jive with anyone, and I think it's backfiring on him. And people won't take him seriously. So I think if our president, if I humbly ask him to really de-escalate this kind of name calling rhetoric, I think it will really run much better. He is surrounded by very intelligent economic advisors, but my biggest problem is the way he delivers his messages.
Yeah, well, you're not alone in that. That's for sure.
So how about
Um,
if we took the, I'm sorry, if we took this Ed to and Andrew to the market, right? The market's now down about 10% year to date with all of this noise. Um, where do we sit at a macro level in terms of your view of the market, Andrew, over the next, I mean, you talked about June with the Fed now kind of uncertain and all that. Where do you think things are headed over the near term anyway?
Well, call me crazy. I believe the biggest risk has already surfaced, meaning the cards have shown. I think, what happened in the Rose Garden back then when Trump was holding the big board with the ambiguous tariff, the reciprocal tariff board. I think that was the political nuclear bomb, in my opinion. And from that point forward, many nations have already started negotiation with the US. And again, right now, China is the biggest problem that's in front of us. And for the markets to recover, we have to get clarity on this issue. We need to resolve this standoff between Trump, Powell, and Xi Jinping. I don't believe China will allow itself, or Xi Jinping will allow China to go into an economic tailspin. It's very unpopular, especially among the young citizens in China. There's already an internal movement that is quite negative on the CCP. So we're hoping that that is the case. And then GDP reporting is around the corner as well. So we are seeing, bits and pieces of China that are struggling with its economy from a macro perspective. So we don't believe that China is going to continue the standoff for too long. Obviously, Xi Jinping has gone around a road trip in Southeast Asia to try to, draw up his allies to work against the U.S. and have sent very strong messages to other countries that if they, line up with the U.S. to go against China, there'll be, strict consequences. Well, they got Singapore. Singapore has already declared that they're standing with China, and worst case scenario, they won't trade with the U.S. But Singapore is not a big, U.S. trading partner anyway. So this situation is really sticking point, and it is the problem for the U.S. or for the global economy to basically recover. So from a macro perspective, inflation is under control. Short term, there will be some volatility. And money supply is still very decent, even though there's a decrease in the velocity of money supply. And if rates can come down, sure, it's going to unfreeze a lot of businesses that are still on hold. Like, for example, private real estate. That's a perfect example. Much of the loans that needs to roll over, that needs financing, they're still at a standstill. Mortgage rates ticked up, interest rate yield also ticked up, and that's a reflection of the insecurity of the policies that the U.S. is exerting right now. So, overall, we really need clarity out of this trade tariff standoff, and that is taking over the internal macro picture here.
Well, Andrew, you've done an excellent job of summarizing everything. As Chief Investment Officer of Turner Investments and IVoT's market analyst, I'm really proud to have you on the show. So before Emil does this fundamental analysis of StarBucks, he's going to give us a brief preview of IVoT Academy platform. Again, there is a link to register for free and the trial for the platform in the description. Emil, will you walk us through this?
You're on mute.
I'm sorry, can you give me the share screen, Ed? And then I can. And I'm going to move quickly because I want to get to StarBucks, which I think is a really interesting situation. So, okay. So again, IVoT Academy is the sponsor of this show each week. This is our basic training program and platform, IVoT Academy. You can register and try out a bunch of this for free, and then we have certification programs that you can subscribe for, and it's all very affordable. Anywhere between $5 and $10 a month. We also have a community where you can talk to our experts and meet other members of our community, and also we have we have the content from Ion Investing there as well as Andrew's weekly newsletter, which is a great newsletter, which I think everyone should be checking out every week to learn about the markets. And so there you have it. Now, this is, thanks Ed for the promo there. This is the IVoT. Well, this is the IVoT toolbox, and inside here I've opened up the IVoT SBUX tool, and we're going to use the tool here in a minute. But before we go to the tool, I'm going to stop share for a second and just talk about SBUX. Okay, so we all obviously know Starbucks, 40,000 odd coffee shops around the world, and they've had a tough couple of years in the business. And eventually, as always is the case, the CEO got, and they brought in Brian. I'm sorry, last name I'm drawing a blank. Anyway, they brought in the CEO of Chipotle, and I call Brian the $40 billion man because he was brought on in August, September. And the stock went from the mid 70s all the way up to the mid 90s just on that announcement. That's $20 billion of market cap on just him. It's kind of mind.
Yeah, Brian Nickel.
Brian Nickel. Mm-hmm. And then, they reported their first quarter really under his leadership, which was the fourth quarter, and it was a mess, complete mess. And after the quarter, the stock went up to 110, and you're like, wow, that's roughly 40 billion in market cap on this one guy. And then after that, in the last month, the stock's gone all the way back down to $80, basically on tariffs and all this market noise. So, I mean, the first thing you could say is, well, what's, Starbucks exposure to tariffs? I mean, they're coffee shops. I mean, they're not, they do have to ship their coffee around the world. So the coffee itself is exposed potentially to some of this tariff stuff. But to be blunt, it's a nominal part of their cost structure is the coffee. I mean, rent and employees are really where their costs are. So it's kind of an interesting situation. So what we want to do then is go to the tool and kind of look at how we can do the analysis from a fundamental perspective. So the concept of the tool, and we're looking at the SBUX tool here. I also have a tool from our show last week for Nike, is that you can see it here, the stock's trading at $81.50. It's got a $93 billion market cap. And that's the market view of IVoT. What we want to teach you how to do is to do your own fundamental analysis and value the company based on cash flow. And we have a method that we teach for how to do that. In the most recent quarter, the cash flow at SBUX was about $1.3 billion, which was down from 1.5 a year ago. So as I said, the fiscal first quarter ended in December was a mess. They're declining cash flow by, almost over 10% in any case. Now you go down further, you can see that down 15%. Now, the way we value that cash flow stream, you'll learn when you come to the platform, but basically based on that cash flow, the company's worth about $118 billion per share estimated. That's down since cash flow declined from $140 billion a year ago. You take that and turn it into a per share value, it's worth $104 per share, down from 124 a year ago. So not good, and this is why the former CEO got fired. Let's assume that turning around a business of 40,000 shops, Brian's not doing that in 3 months. That's one of the questions we'll discuss here in a minute. How long is it going to take Brian to turn around the business? What's he even doing to turn around 40,000 coffee shops around the world? It's like turning the Titanic, right? But just to make the point that at $104 and the stock trading at only 81, the stock is, according to our methodology, about 25, almost 30% undervalued right now based on current cash flow. The question is, Andrew and Ed, what's going to happen to cash flow in the future? Because we buy the future, not the present. Now, in the most recent quarter, sales were flat. So Brian's got to grow sales. And the question is, what's he doing to grow sales at SBUX? I'll talk about that in a minute. And then the other thing is, look what happened to their costs in the quarter. This is where they lost all their cash flow. Sales were flat, but their costs went from 76% to almost 80%. That's a huge increase in their cost of goods. And that's really, from a fundamental investor's perspective, that's the whole story. The question is, what's Brian going to do to fix the situation? And I want to say what's really interesting here is I think Brian is actually, I don't know if he's worth $40 billion, but I'm very interested in what he's basically doing. His simple strategy here is essentially to simplify the menu. You know, Starbucks had grown to this whole smorgasbord of 50 kinds of coffee and mixes and being about a being. And he said, you know what? This is making the customer experience not work. It's slowing down our throughput. We're able to process less people. And so he said, if I simplify the menu, people are going to move through more quickly. We'll let them, he actually added some free add-ins that had been taken away to make the user experience better and faster. So that was one thing. The other aspect of that is in terms of his cost structure, if he reduces the menu, he can automate more and probably have less people behind the counter. They're not out there making 50 different drinks at a time. So it kind of hits both sides. So if you like that strategy, then you can arguably say that maybe he gets them back. I mean, a home run, let's give him a home run for a minute, would grow sales at 10%. This is 3 years. That's what we do. We forecast 3 years of 10% compounded sales growth, and they've historically been able to grow at that rate. And that would take the stock cash flow value up to $128. And then if he can get the costs under control, and I think a simplified menu will do a lot to make that happen, and let's say he gets back down to 76% where it was even just a year ago, you end up with a cash flow value of $162, basically 100% return on what I think are relatively possible future tracking. Now, I'm not making a recommendation. The beauty of IVoT is you come, you access the tools, you study what Brian's saying. You know, one of my analysts went around to coffee shops around New York City and went about 3 months ago because we were discussing this and they wanted to see what was actually happening in the store. And they went to the managers of the stores and the stores said, well, actually, we have a stopwatch now in the register and we have to be timed for every customer. And they said it's tough right now because we're still figuring out how to speed the throughput. They had issues with the online orders versus the walk-in orders. And then she went in 3 months later and they're like, wow, it's working now. We've got it. And she said you could see it. The lines were moving quickly. It looked a very different store. So it's amazing how a company of this complexity and size, and yet somehow the former CEO wasn't doing this simple blocking and tackling. And now this guy is completely honed in on one very specific issue, which is getting people through quickly with a good experience. And I think it's a kind of interesting, you know, at $80, you know, I think it's an interesting stock to take a look at. I'll stop there. And that's my kind of stock of the week look on Starbucks.
Well, that was fantastic, Emil. I learned something every single day that you do this on IVoT. And I encourage everybody watching to dive in to the IVoT Academy. It's a tool that is very, very inexpensive. And if you take the time to learn how to use it, it'll make your investing a lot easier and better. Thanks, Andrew and Emil, for that insightful session. To learn more about IVoT and how we can help you achieve your financial goals, click the link in the description and register for a free trial. IVoT's sophisticated yet simple tool equips you to analyze, forecast, and manage your financial future, including budgeting, investments, credit management, wealth planning, and business management. See you next week for an update on the market and our stock of the week. And a further disclaimer, the material contained herein is intended as a general market commentary solely for informational purposes and not intended to make offer or solicitation of sales or purchase of any securities. Such views are subject to change at any time without notice due to changes in market economic conditions and may not necessarily come to pass. The information is not intended as a specific offer of investment services by Chapwood Investments or Turner Financial Group. Guys, this was a great show. I appreciate you doing it. Thank you.
Thanks,
Thank
Ed.
you.